We have two great speakers, Jirka and Michal, who will share, first of all, their personal experience, and second, I will do them a bit of grilling, and you can also use Slido to share your questions, and I hope it will be just the reasonable ones, but even for IT geeks, you don't have to raise your hand to shoot a question, but use Slido instead. So thank you very much for your time, and Jirka, the floor is yours.
Well, first of all, I thank Michal for having the opportunity to share a few thoughts here. When he extended the invitation, I was rather skeptical because I already thought that doing hard work and getting up early in the morning and staying late is not fashionable in younger generations, and he proved me wrong. And when he sent me a message last night that close to 180 participants are registered, I was pleasantly surprised. So I also thank you all for coming here, because I think that being in a company of promising and young and hardworking people, you never get tired of that. So it's an honor to be with you here and to share a few thoughts. And this is actually the last slide. That was the kind of surprise. So I thank Michal for revealing the secret. Couple disclaimers in the beginning. I hate mentoring, right? I hate teaching. I hate telling somebody what to do and not to do. So please, whatever I say tonight, take it as my personal way of trials and errors. Because some businessmen do it by the book, as you say. I disagree. I sort of write my own book of trials and errors. So whatever you hear here tonight, it's really things that I've been through, and I found usually the slow and hard way. So if you avoid some of the mistakes that I personally made in the last 10 years, I'll be glad that it had some impact. Well, sadly, you cannot really, as Michal said, distinguish myself and Chytry Honza, the company that I founded and led for many years. Because most of the people in the industry, they already call me Honza and not Jiří, right? I was trying to struggle with that for a few first years, because obviously everyone thought that if you found a company, you're gonna name it after yourself, right? This is so selfless, right? So I'm Jiří, I'm not Honza, but all my lessons are from Honza. And I wrote being an apprentice for 10 years. Because it's only after I left the company that I feel that I'm not apprentice anymore, because I've been through all the processes, all the stages of the startup, from having the idea, creating the idea. I still remember the amount of alcohol that we drank with Jakub Haveland, the other founder of Chytry Honza, right? Now the head of Rockaway and very successful guy. We drank for three days in a row before finding out the right name for the company and putting down the concept. So that was the first step, and the last step, as you all know, was the exit. But I wanted to be special, so I exited twice the same company. It's a long story. I won't bother you with that one. But it's part of the lessons that I learned, especially the one that you can really never get the timing right of the exit. You can never choose the right partner to whom you exit, and there is a lot of things that you must avoid when you actually want to jump out of the business. Well, so few lessons. What it takes to scale. Sadly, we are in the Czech market, and for those who don't want to expand beyond the Czech market, you're stuck with 5 or 6 industries that are worth working in, because only 5 or 6 industries in the market actually generate enough money to turn your startup into a profitable company. Finance is one of them. And sadly, those 5 or 6 industries are the most conservative ones, with well-entrenched guys. I always thought that finance is the worst one, until I spoke with Leoš Novotný, right? You know him from Leo Express. Then I realized that railway is actually much worse than finance, and I was lucky to be in finance and not to be in transportation. And I thought the airlines and air tickets and everything was easy until I spoke with Oliver, right? And the pain they've been through, their own fundings and stuff like that. So sadly, what you need is idealism, because if you're not idealist and optimist, you won't believe that you can change the industry which is wealthy, which is entrenched, and where the establishment will do everything to destroy you. I fought the bank and insurance companies and investment funds, not the VC ones, but the big retail ones, because they all want to keep their margins and profits, and they don't want to allow any neobanks and digital brokers in. And sadly, after 10 years of personally trying, the numbers do not look that much better than looked 10 years ago. One example. Half a year ago, I calculated exactly what the revenues of all FinTech companies combined together in the Czech Republic are. It's actually less than 1 billion crowns revenues, right? And I'm sure you heard in the news what the profit of Česká spořitelna was for last year. Did you? Anybody know? Yeah, it's 15.5 billion, not revenues, profit of just one player. So with Michal and other guys, we've been trying to change the industry for the last 10 years. And what's the result? We even didn't get to 1 billion of revenues. And Česká spořitelna, which has been around for close to 200 years, is still making 15 billion of profit. So idealism is what it takes to make the first step, and you gotta really believe that even though that you won't really win the fight, it's worth trying. The second lesson that I learned is obviously persistence, right? Nothing new, but to scale means to be how to put it, to be visible and to be known in the market. And if you only grow organically, you won't get noticed. You'll be nobody in the industry. That's what we thought in finance, because Chytry Honza, a few numbers, founded in 2009, so more than 10 years ago, up to the year 2013. In the year 2013, our revenues were 25 million crowns, 25. And we said, okay, tens of billions of profits in the banks and Chytry Honza with 25 million of revenues. Something's got to change for us to be heard in the market and to be respectable, so that we get invited into all those fashionable parties of the banks and insurance companies. So we figured, okay, so unless something changes, we won't get there. So we made a sort of a leap of faith, and I bought a sales network of about 400 sales guys at that point. The company was 4 times larger than we were. They had about 100 million revenues. So it was a huge gamble. And it was, for a year, it took us to sort of absorb and to adapt to a completely new running of the company. It paid off because after 4 years, the revenues went from, as I said, 25 million in 2013 to 500 million in 2017, right? So if it was not for the persistence and the idealism, we wouldn't get there. And as Michal from Twisto will surely confirm, because I remember the first time that we spoke and he shared the idea of Twisto many years back. I still remember. Twisto has gone a long way since then, and Michal and all the entrepreneurs know that they need to rethink the business models and rethink the company constantly. Chytry Honza, for example, started as a purely mortgage marketplace. No physical distribution, nothing, and only mortgages. It was successful, fine. But we based the assumption on two thoughts: that the brokers that will be serving the clients on this marketplace, that they do not cheat, and that they care about their reputations. Well, wrong on both accounts, right? So we needed to rethink the whole process, rethink the whole idea, than just having a marketplace. When you have a marketplace, it only works when the service provider has some ethics, some sort of dignity, and some kind of sense of reputation. And everybody who's in the financial advisory industry or real estate knows that sometimes that's even worse than taxi drivers, right? I hope that no financial advisors are here. And we used to have 1,500 of them, so I know quite a number of them. So way back, we said, okay, we need to rethink the whole thing. And unless we have our own sales guys, the whole process just won't work, because we won't be able to deliver the service, the products, and the quality and the speed that we needed. So with Jakub, we thought, okay, the company is going to be digital. It's going to be purely online. But look, I mean, 10 years later, we ended up a company of 1,500 sales guys, and the company is basically purely offline at this point. And without rethinking the whole process and the whole thing again and again, we wouldn't be here. Because as you might have noticed, basically no other pure financial comparison website sort of remained in the initial form, initial stage. Even Honza Barta, Michal's best friend, do you remember how e-pojištění started? Exactly as Chytry Honza as a comparison website. And e-pojištění at this point is a huge call center. That's what it is, right? Exactly as Chytry Honza is a huge sales network at this point. Both projects were supposed to be purely digital. None of them are. Well, exit, right? With exit, obviously I thought it was going to be a global success story. Because in 2014, 15 maybe, through many sort of chances and good luck, I managed to get into attention of this global multinational Dutch insurance company, Aegon, right? So I said, okay, Chytry Honza is going to be the first Czech startup sold into a huge multinational insurance company. Well, it took 2 years to go through this acquisition process and DDs and talks and term sheets and SHAs and stuff like that. And after those 2 years, when we closed and we started to work with the Dutch guys in the company, God, the Dutch are cheap in many ways. They are very smart, but they are cheap. But we started working together, and after half a year of them being in a company, they suddenly, something changed in The Hague, and some consultancy company told the headquarters, because it's like the 5th largest insurance company in the world, right? So they have a lot of McKinsey guys in The Hague. And some of those McKinsey guys told them, look, whatever markets generating less than 20 million euros profit, get rid of it, right? So one McKinsey study basically crossed the entire CE region for Aegon. So they sold the insurance company in Czech, in Poland, in Slovakia, and they said, okay, but we're gonna keep Chytry Honza. I said, like, that doesn't make sense, right? Because if you don't care about the CE region, which is growing and profitable and stuff like that, it doesn't make sense for you to stay in the company. So instead of having a total success story with exiting to a multinational company, basically I got stuck with a, I don't know how to say it in English, koule u nohy, right? Where we had to fly over to The Hague for the board meetings and anything I wanted to decide in the company. It took me half a year to get stupid things approved, right? So that's one of the things to avoid. But what I was gonna say is that you can never choose the right timing, because when guys like the Dutch, Egon and companies like that with huge budgets, once they show up, you cannot resist the temptation and you cannot really pick the right timing. As I said, with Egon, it took us 2 years to go through the process and sell a large stake. And in fact, then I'm hope that I'm not revealing any secrets. That they were supposed to take an option and buy the rest of the company. Well, around this time, right? But what I went through in the 2 years of the acquisition process was that when it takes such a long time, obviously the company needs to be run in a normal way, because the clients, they don't wait for the acquisition. The competitors do not wait, the partners do not wait. And instead of just running the company, you suddenly need to run the whole process of selling the stake to a multinational company. So what I mentioned here is the control. Because unless you basically control all the steps, all the decision making, what's going to be said and where, and the decisions that are taken, unless you actually control it firmly, you can never basically exit the company. And even though we had a lot of lawyers and advisors and the entire Rockaway team on board to help us sell the stake in the company, basically it was ourselves in the company, the few guys that were on the management that run the whole thing. And thanks to them, after 2 years, when basically nobody believed that we were going to close, basically we did. So the lesson is that no advisor, no fund, or no McKinsey guy is going to help you with the exit unless you still hold the control of the company, hold the control of the whole process. And the hardest lesson, basically, that I learned in the exit, especially in the second one, was that before you do exit, you should make sure that the company keeps what is most valuable. And Chytry Honza had a certain special DNA, because most of the people that came stayed till the very end. And no exit can be successful if you let the new owner basically destroy the DNA and destroy the team. Because obviously, when you exit to a big company, and it's not a judgment, it's a statement, right? Every big company, and the guys in the big company, they obviously think they know better. And a lot of guys in the corporate world have been there for ages. And they think they know better, obviously, and they are waiting for the opportunity to show the startup guys that they are the real ones, right? So the lesson that I learned was that before you do exit, you got to make sure that the new buyer, the new owner, actually understands how important the people are for the company. Because if you destroy the DNA, if you destroy the team, you destroy the legacy, and obviously the company then suffers, right? So before you exit, please take care of people, because that's the most valuable thing that the startup can have. Well, sadly, again, and I realized that I'm being sort of pessimistic this evening. The notion is that once you exit, you're happy, you take a year off, you go on a vacation, you travel, you forget about the business. Forget it, right? It doesn't work that way. If you really love startups and if you really love your work, you won't quit. So the day one, on the first day that you are actually out of the company, you'll be thinking of new projects, new partners, new things. And that was my story. And so my day one was that I pull out of the drawer all the ideas that I had in the last years in Chytry Honza, and I said, okay, these are the thoughts that I didn't have time to work on. And I said, okay, now it's time to work on those. And then I said, okay, I'm gonna need some team because I always had quite a sizable team, and suddenly I was alone outside the company. So I was sort of thinking about whom I have met and whom I want to work with. And I remembered one guy. Actually, he remembered me at the same time, but I remembered him too. Because I invited him to speak at a conference because he founded a project called Rondo, if you heard of it, like only the biggest loyalty platform in Czech Republic. And I told him, look, we already have 100,000 of customers, and it took us 5 years to get them. And he was like, well, I got 1 million, and it took me a year. So, Lukáš, stand up, please. This is Lukáš, and why I'm mentioning him is that the first thing I pulled out of the drawer was an idea to make the finance simple, understandable, and most of all fun. Because in the financial industry, people have the notion that it cannot be fun, it cannot be engaging, it's only boring, and people either don't have enough money, so they get a loan, or they have too much money and they invest, but it cannot be engaging. And thanks to Lukáš, I understand that it's untrue. So what we worked on since day one was a project that I had the chance to present to Michal before the end of the year, and luckily, after the scrutiny, we were one of the 1,000 number on the left side, and luckily we were able to convince Michal and his team that it's worth investing in. So I hope I'm not revealing any secret, but I already did. But exactly. So that was the first slide that Michal actually revealed. And that's something that we, with Lukáš, are working on. And we're happy that Michal sees it the same way. And I'm sure he will share a few thoughts about it as well. But going back to the lessons, perhaps the idealism. If you remember one thing out of those 6 or 7 ones, keep the idealism, because when you came here, you showed that you believe that it could be done, and I'm sure you can work hard and convince all the investors. So all the luck with scaling and exiting the company, and wish us good luck to work well with Michal and his team. Thank you for the attention.
With the sentence starting, I remembered a guy and he remembered me, it sounded like coming out, and it actually turned out like there is some business behind, so I'm actually glad, I'm very glad for that. And now Michal from Twisto will share his Twistory.
Yeah, so actually I changed my presentation completely. I've done it just now. That's why I need to change it. Yeah, you can plug it here. Because actually, the way, Jirka, you have done it, I had a very big marketing presentation of how Twisto is great. But it turned in more into kind of learnings and fails that we had on the way.
Ne, bez zvuku.
Bez zvuku, no, dobré. Máte kliker? Máte, že ano. Good, guys, great to be here. Good timing. It's like the Matrix. Twist story. So I was really initially going to talk about our product, how great we are, but actually you changed my mind. And actually I just did a couple of slides, kind of key learnings of myself over the past almost actually 7 years of building Twisto. And actually I thought it would be much quicker, but it actually is not. A couple of learnings that I actually learned on the way. These were our beginnings. So 2013, looking pretty good. This was how we were brainstorming on the name. One of the names was actually Moneta. There was a guy selling coins on that website, and he wanted to sell it for like 100,000 Czech crowns. We said, no, we're not going to pay for that domain that much money. And then the bank bought it. He probably got more money. So really kind of early days of Twisto. We were fucking clueless. We had no clue what we were doing back then. Today, it's a much bigger team. It is actually part of the team. And it has actually changed massively the company, not only the product, but also the people, the culture, and also what we do. Couple of numbers. We have over 140 people and 9 dogs. The dogs are breeding between each other, so probably 20 dogs by year end. Many dogs in there. So we are in Czech and Poland. Initially we started as a Czech company, I'll talk about that. Now we expanded into Poland and going to Romania. So wish us luck, it's a tough market. Approximately 600,000 customers, so fairly decent number, but still very small compared to Česká spořitelna and some of the banks, but kind of growing pretty quick. We raised a decent amount of money, but we also spent a lot of money. So for the past 7 years, we had a negative EBITDA. And this is nothing to be proud of, it just means we spend a lot of money, we hire a lot of people, but we also grow pretty quick. So for the past 3-4 years, we should triple the company every year. And banks actually grow at a much smaller pace. But what is the key learning here? FinTech and finance is very hard. Is anybody thinking of actually doing something in finance or starting a FinTech? Anyone? Okay, good. Okay, you're smart. You guys are really smart. No, not you, but the rest of you. So first, it's an incredibly competitive market, not only because of banks, but also of other global fintechs entering the region. So you have guys like Revolut, Number 26, and Monzo. These are guys that raise, billions of Czech crowns, and they're really big guys, and it's very competitive, number one. Number two, banks in our region actually are not doing that bad of a job. I mean, if we ask our customers, do you hate your bank? We wish they said yes, but actually they're okay with the bank. I mean, they just send a paycheck, they pay with a card, Apple Pay, Google Pay, and they're kind of okay with the bank. And nobody likes to pay any fees. So if you say a fee in banking, you ultimately say, oh, I hate these guys, I'm not gonna pay for my account. And that's ultimately the mindset of customers. Customers are not willing to pay for financial products. So it's a very competitive industry, very low margins. You will spend a lot of money building a fintech startup. Don't do it. So, big learning from the beginning. So, when we started in 2013, we actually took VC money from local VCs almost from day one. And what does it actually mean? So I put some of my money in, I didn't have that many. I was a young guy, I was like 15. But really from day one we had VC money. And what it meant, we actually haven't really, we didn't even have a product and we were raising money. That means that I gave away a lot of equity in the business and I got diluted over the past 7 years by quite a fair amount. And I had to kind of repurchase the equity, get some equity options. But I would really be careful about this one. It was kind of 7 years ago, the VC industry is now much more professional than what it was before. So what happened back then wouldn't happen again. But really be very careful when you want to start a startup, you should raise money once you have a product, or you should raise it from guys that will not take majority of your business. So very careful about this one. Learning number 2. So when we started, so the picture with the guy with the weird logo and the dog, we started with one very simple idea to simplify online payments, and that today is approximately 10 to 15% of our business, and remaining almost 90% of our business is actually something completely different. And 7 years ago, we had like no clue we would actually be doing this. So number 1, don't fall in love with your initial product, because it will change massively, it will evolve, and you need to be very flexible in changing the product and making it actually according to the customer's needs. So, and yeah, big learning. So when we started, we're like, oh, this product is amazing, it's gonna make us really rich, it's gonna be huge. No, it wasn't. Number 3, so actually I spent quite a lot of time abroad. So I lived almost 12 years outside of Czech Republic. So I kind of thought I'm kind of like a cool guy, international guy. And then I came back to Czech Republic, and I would say the first 3 years of Twisto's life, I was only thinking locally. So I was only focusing on Czech Republic, only raising locally, and only caring about local customers. But ultimately, the big learning that we had is we should have actually been thinking about expansion much earlier in the life cycle of the company. Why? Processes, mindset, but also attracting different kind of investors. So big learning for us, don't build, I mean, you can build great local businesses, which can probably make a lot of money, not in finance. But with us, we stayed local for too long. We should have been much more aggressive on expansion. And that kind of leads me to the second one. We've been funded locally, and again, Michal, nothing against what you guys are doing. But we actually started approaching international VCs or international investors. It was about 2017, so almost 4 years in the company life cycle. We started approaching the big guys in London, Berlin, Amsterdam. Nobody knew who we were. We had to say where Czech Republic is and Prague. Not just some of them knew. But really what I would recommend, once you have a product, you have some initial funding from local guys, go to those big cities, go to conferences, meet the big VCs, start creating a relationship, and ultimately get one of these guys invested in your business. It's going to be life-changing and company-changing, because these guys have a completely different mindset and approach to product, building teams, and they also have kind of bigger balls. So I mean, they tell you, look, just like hire this guy, he costs, you know, a lot of money. Local VCs could sometimes say, oh, be careful on the burn rate. The international guys are going to say, yeah, like spend the money and make it work. That's why we are EBITDA negative for the past 7 years. But really, international VCs, go out there, speak to them, make your kind of name known in those big cities, because these guys are ultimately going to write a big check for you to make the company successful long term. And our mistake was really going to these guys too late. We were too comfortable funding in the local market. Number 2, no, actually not number 2, number 5. Hiring senior people, not by age, but actually age correlates with experience. My mistake has been that majority of the people I have worked with were people, or actually my peers, so guys, you know, 25 to 30 years old. You get high energy, high motivation, but ultimately if you want to build a big company, which has a lot of customers, sizable on the organizational level, but also international, you cannot build it with guys who are your age. That was a big learning for myself when we hired a very senior CFO. We actually hired a very senior HR person and head of growth, and actually transformed the company into what it is today. And we hired those people, actually we started hiring these people, I would say a year or 2 years ago. If we have done it much earlier, the company would maybe be at a different stage. But really don't be afraid to hire really senior people into the business. It cannot be like some corporate guys that want to do a startup thing, don't do that. But there are some very high quality people that can really boost your business because they have the experience of doing so. That kind of relates to this kind of another realization. So last year we added around, I think, 40, 50 people. So we almost kind of like 60% added on the headcount. And before some of the senior people joined the company, I had no one-on-ones. I was not giving a feedback to anyone in the company. It was just a bit of a punk. I mean, I thought everybody knows everyone. We're a small company. We have dogs. We are cool. But ultimately what I realized, an organization of a certain size actually needs a hierarchy. So we actually have a chart, and I'm not on top, actually there's some other people there. But you actually need a structure. You need to build kind of leadership teams. You need to tell people what they're responsible for. And I know this sounds really basic, but it actually took me some time to realize, and I had to hire some very senior people to tell me that and help me establish that in a company. So really structuring, I mean, everybody's talking startup, it's really cool and dynamic, but ultimately every startup needs to become a little bit like an organization which is more mature and has some kind of a structure and rules. Another big kind of underestimation from our side, and I think it's kind of going throughout the slides. So when we started, I was telling my investors I'll be EBITDA positive, meaning we'll make a profit in 2 years. And I've been saying that ever since 2013. And it's kind of like getting boring for the investors. So you're saying like, okay, so maybe 2020, let's do it, right? It will probably take another 2 to 3 years for us to be break even, which is kind of scary. So imagine building a business for the, if you're starting today and for the next 9 years, you will be burning money every year and not making enough money to cover the operations. What it means, this actually creates a lot of stress. So I'm actually, most of my time, 80% of my time, I am fundraising money. So we just started another financing round. We're doing an internal round with existing investors and fundraising another big round with international VCs. And it's actually not that big of a fun. I mean, it's kind of cool to fly to London, meet the investors. But if you have a runway of 2-3 months in a business, I have some guys from the company here, we're good, we're still good, we have some money. But it actually creates a lot of stress on you as a founder. So imagine every year just burning money and not making much money in return. So Michael, I'm actually not investable by you guys. I mean, this is scary, right?
Very much.
Yes. This is nothing to be proud of. This is showing a failure of me as a founder, not to find a business which is better in monetization or finding a model how we can actually make money. So this is not something I'm proud of. This actually creates a lot of pressure. It also means I'm giving away a lot of equity in order for me to sustain the company. So it's not sexy to fundraise money. It's good to raise money from good VCs that can help you. But fundraising every 12 months, it drains you as a founder and it can kill the business. This one. Actually, today, 25% of Twisto is owned by a bank and an insurance company. Great guys, they told me before they invested. But ultimately, I mean, they're corporates. So even though it's the venture arm of the bank and the insurance company, and they do dress kind of like us, so kind of cool shoes, no tie and suit, ultimately, they have a completely different mindset. So first, they don't really understand what you're doing, number one. Number two, they're very political. So any decision that they do with you, they need to run through the internal structure. It's very political, it's time consuming, there's a lot of bureaucracy, and it can waste a lot of your time. So with hindsight, again, great guys, I love them, but it creates a lot of friction in the fundraising process, but also in the process of running the company. Ooh. Last learning, and actually this learning I have made a couple of weeks ago, and it relates to the size of the company. So again, 140 people, 9 dogs, they're breeding, there'll be more dogs. But one thing is, when you start a company, just a couple of guys in a room, you know each other, everybody knows what a company, what's happening right now, what's the future, and what are you working on. When you get to a certain stage or scale, you need to start motivating people, you need to speak to them, which is tough. You need to give them feedback, but you also need to celebrate successes more. And that's something we haven't done, because every time we release a new feature or get new funding, we're going to say, oh, that's fine, but we actually need to fundraise again in a couple of months. But what we realize, it's incredibly important to celebrate successes, even though there are small ones. And I don't mean like just releasing a small feature. I mean, it should be kind of something sizable. But really, this is an important element to bring the team together and really kind of build a company culture. And that's something that I've actually personally underestimated. And it's actually resulted in some people leaving the company, which is not great. But ultimately, it's about the people, great team, Christmas spirit. But yeah, I mean, what makes it all worth is the people behind the company. And ultimately, it's a lot of fun. So I don't want this to sound a little bit depressing. It is. But actually, seriously, it is a lot of fun building a company. The key question, how to actually at some point realize some value and exit the company. And that's something that we're kind of thinking about, but it's kind of a couple of years ahead. So you've gone through it. We will go through it in 10 years, maybe. So we'll see. So guys, thanks a lot. If you have any questions, please feel free to email me, and happy to chat in the networking session. So thanks.
Thank you very much, Michael. I'm very glad that your slide number 11 improved the mood of your presentation. At slide 9 and 10, I felt like we had some fuck-up night or what, but I'm glad it improved. So first of all, I would like to ask, would like to thank Michael for his presentation, and would like both of you to join to sit on the chairs and share the mic, not vice versa, please. We have a Slido up, so we will soon see the questions from the audience. First question, I guess it's for me. Why so late? Because there are too many of you who come late. So in order not to miss my funny presentation, the other unlucky ones who come early need to wait. So it's actually your fault of those of latecomers. If a majority of you is coming on time, then we will be starting on time. Then Jirka, your turn. So I believe that sharing is caring. I was unlucky enough to share it within my relation, so I hope that at least the mic will work. Switch on, please. It's very technical.
I'm a technical guy. Actually, the truth is that I get a degree in modern history and diplomacy, right? So I have no clue about finance and technology. That explains a lot why it took me so long. Well, the first question. Well, I do not plan any extension in foreign markets with Chytry Honza, but a short comment on the successes, right? And I think Michal just mentioned it earlier. It just takes time because the market is very small, and in the FinTech industry, all those fat cats are burning cash as hell, right? And I know the guys in banks and insurance companies in Czech Republic, and I know their budgets. And all the VC funds and all the funding that us guys ever got is much smaller than those annual budgets that are in Česká spořitelna and other companies, right? So the success is that the both companies are still in the market and are still fighting, right? So that's the biggest success I would comment on.
Thank you very much. I see that we are in the Czech Republic because the nasty question is coming. If the company is still not profitable, does your salary reflect that? I guess it's for you, Michael.
Who asked it? Look, so my salary hasn't changed for the past 7 years, and it's very low. I live with my parents. It's kind of cool. No, I don't, but no. So look, my salary has not changed, but my salary is kind of well below the market. So if you imagine like the lowest worker in your company, that's kind of me, just to sustain kind of my wife and my baby. But yeah, my salary does not reflect that, because if it goes lower, I would need to kind of get some help from the government. So yeah, it does not.
One more for you. What's your exit strategy?
Yeah, so we actually don't have those debates within the team or investors yet. So I think you really need to have a mindset, I'm going to sell the company. And I think you kind of probably went through it. But who's going to buy us? On one side, it could be banks. So we already have a bank as a shareholder. That's kind of a natural progression. Second one is one of those big fintechs. So guys like Revolut or Klarna, they could come in and kind of buy the technology, the team, and the capability in the region. Third one could be someone like MasterCard or Visa, or maybe someone like PayPal. That's actually in the same rank as Klarna and Revolut. And then it could be actually some consumer finance companies, so maybe Home Credit, Settlement, Essox, Cofidis. They might say, look, our product is not as sexy. Let's buy something that's even more sexy and has a great tech. So these are kind of the groups that could buy us. We've never kind of actively approached in such a dialogue because we don't think their time is right.
I've associated the question. That's the beauty of being the moderator because I can judge the order. It's associated with the exit strategy. Do you think having strategic investors on board will hinder your exit strategy? I will rephrase that. If you have a bank, you are not afraid that it will scare away the other banks or other investors?
Again, a great question, very smart question. We had this debate in 2017 when ING Bank and Unica were investing. Number one, they're investing from their venture arms. So it's separate entities from the pure bank and the pure insurance company. But ultimately, it is how you structure the agreements. So kind of the devil is in the detail, and ultimately they don't have any preferential rights. They basically behave like a VC. They have the same motivation as a VC. I had very few investors so far that we met that would say, we will not invest in your business because you have those two shareholders in the company. So it was not a problem. But if you had someone like, for example, Česká spořitelna directly owning 50% of your business, I think it could be an issue. So they need to be a minority shareholder, and ideally not kind of the bank, but a venture arm of that corporate.
Okay, thank you very much, Jirka. How did they manage to get first businesses on a platform?
Well, again, it's quite the same story as my colleague here, because I before I founded Chytry Honza, I was in the States doing some internships and stuff. So I thought I was the smartest guy in the world, coming back to the Czech to show them all how business is done. So I thought it was going to be automatic, but the truth is that we launched Chytry Honza in the middle of the mortgage crisis, right? But the good thing that helped us was that people are in the crisis. They were really taking their time with which offer to pick from mortgages, and that saved us, right? People were trying really hard to save money on mortgages, and introducing marketplace at this point really saved us. And what we did, we bet on the story of Chytry Honza, and Honza being the typical Czech guy, lazy, sort of. In Czech, we say vyčuraný, right? A smart ass, maybe in English. So what got the first business to us was the story behind Honza, because the customers could identify themselves with this Honza, and they really came into the website and said, okay, I'm one of the Honzas, and I'm going to use you. And that's how we sort of started off in the beginning.
Whoever wants to respond. I spent lots of time perfecting my product. How do I convince first customers it is good so that they are willing to buy it?
Yeah, just give it out for free. No, seriously, it's the best way to do it. I mean, okay, you should probably not take advice from me, but think about monetization later. So first stage, it will ultimately be about growing the customer base and showing that actually there's an adoption in the market for your product. What we've done actually at the beginning, we were actually asking for a fee. So when a customer was using our service kind of from day one, we were charging a certain fixed fee for using it, and then we actually dropped it because it was hindering the initial traction on the growth side. That's why we also have negative EBITDA. But ultimately, I would not think about monetizing customer from day one. That's kind of my view, but again, probably not the best guy to
Maybe
to
give
judge.
it for free is one of the reasons for 7 years of negative EBITDA.
We now monetize. We do monetize now, but it took us some time. But yeah, I mean, is it in finance, this one? Who actually asked this question? Someone outside of the room.
Yeah.
Okay, but look, my view, I would not perfect the product too much. I would just launch it and iterate it based on what the customer is saying, or if they don't use it, I mean, try to do focus groups. That actually helped us a lot. But we have a big saying in company, better done than perfect. It's very hard. I mean, we always say it's hard to kind of actually do it, but just launch it and iterate. Again, the first launch took us 2 to 3 months, and the product was shit. But we actually launched and we got first customers, and it was very encouraging.
Question for you as well. When should you approach international VCs? How do you make yourself known in the foreign VC ecosystems? Please elaborate as much as possible. You can.
Yeah. So number one for us was actually presenting at conferences. So really picking kind of, let's say, 3-4 top conferences and going to these every year and make sure you get on the stage. So actually majority of our investors have seen us on a stage before, and then we engage in a dialogue with them. So it was kind of really number one, going to conferences. That was probably the biggest kind of impact that had on building a brand of Twisto, but recognition within the community. Number two, we were pretty nosy on LinkedIn. So I was basically just adding them on LinkedIn, not kind of harassing them. It was in a nice way. And actually starting the dialogue on LinkedIn, flying to the cities and actually meeting them in person in their offices. And
That's it.
Yeah, that's it.
Jirka, so that you are not bored too much. Can you evaluate success of Chytry Honza?
Well,
Speaking in public.
speaking in public, what I value the most about Chytry Honza is that we tapped into something that is undervalued in the market, and this is we call it online to offline connection. Because FinTech, obviously in the financial industry and real estate and stuff, it's very hard to do it purely digital, because most of the products are over-regulated, such as investments, life insurance, mortgages, and you cannot really deliver them in the purely digital mode. So you need the offline part. So what I value the most in Chytry Honza, that we managed sort of bridge these two worlds by adding the sales network. So our greatest competitive advantage to these days is knowing both worlds, the purely online with the offline world. Because if you handle and you master the offline one, then it means that no global fintech startup will come here and crush you, because they won't defeat you because they are not localized. So this is the biggest success of Chytry Honza in those 10 years.
What do you look for in a CFO? Are CFOs important for early stage startups? Whoever wants to take it.
Yeah, so I mentioned that we actually hired a CFO 2 years ago, and it was a huge shift in kind of how we were raising money and able to raise money, especially for the portfolio of customer payments. It depends on the startup and the industry. So in FinTech, or what we do in lending, it's incredibly important because we do approach lenders, we do approach banks, and having someone credible who looks older than who looks a little bit older and has some experience, that adds a lot of value. What did I look for in a CFO? So actually, it was a guy who was 7 or 8 years in a bank. He was in consulting for several years, and very smart guy, obviously on numbers. And he's actually very likable, so he's a fun guy, and I like that. But yeah, I mean, it depends on the startup that you're dealing with. I mean, if you're doing an e-shop or you're doing something in e-commerce, you probably don't need a CFO from day one. If you're doing something in finance and you will rely on external funding, getting a CFO, I think, is very important.
What's the best advice you ever got from a VC?
Oh, okay. So it was really work harder, smarter, and cheaper. And they actually say that many times in board meetings. So the best advice, so I think it really comes to hiring. And that actually came with the last round of financing, where we got one fund from London and the other one from Amsterdam. And what they brought an outside perspective on the team composition today. And they ultimately say, if you want to scale the company and become something in Europe, you ultimately need people who have done it before. So really it's around hiring top talent, but not only locally, but actually reaching out to the big capitals across Europe and trying to hire those people and bring them over to Prague. And that's actually something that we're doing right now.
Okay, Jirka, please tell us something about your second exit.
And we still have 2 hours to go, right?
Yeah.
Well, to be brief, right? With the second exit, remember when I told you that I got stuck with those Dutch guys in the company, right? They didn't want it to leave because it's as Michal said, with the corporate guys, sometimes it's better for them not to do any decisions than to make risky decisions, right? So the Dutch guys, they held 49% of the company. I was a minority shareholder, and there was the local VC fund, Rockaway, you know. And so the Dutch guys, they were stuck in their nice offices in The Hague, and obviously Rockaway at that time had a full hands of sort of turning Mall CZ profitable and other funny stuff going on. So honestly, I was still, yeah. I wish them good luck. So I was at a weird point of being a founder, a minority guy with a small salary, as Michal's, right, with limited personal funds, and I was actually the only one who really sort of cared about the company and who had heart in the company, right? So I said, okay, we were stuck as shareholders with any kind of decision for a year and a half. Basically, the company was bleeding people and money and attention and partners, basically everybody. So I said, okay, unless I do something quick and fast, and the company is gonna be dead. So I went around in the market and I found out that the interest is there. So I found a very ambitious local fund that was very quick and very let's say decisive in their acquisition, and they did it. We strike a deal that was a win-win situation to everybody. I was surprised that the Dutch guys they turned some nice profit out of that, and Rockaway guys were happy to have some cash available, and that was that, right? So that was quick and successful. And as I said, if the new owner keeps the right people in the company, which they are not very good at this point, they will keep the company successful. So that was my last lesson. So if I had 1 hour more to explain it, I would, but that's the short story of sometimes being stuck as a minority shareholder in the company.
I have associated comment that I would like to hear more about your third exit plans in the next month. So hopefully there will be more positive news from you, for me and for my colleagues from the fund. Then another Czech question for Michal. Is your business model good enough or sound enough? It's basically the same question. What do you need to have a break even, or even a break?
Sure. So very good question again. So smart audience. It is a sound business model. I think one thing we're still not doing well is monetizing. So we could do much better on kind of collecting fees because we're providing a great service. So I think we're kind of providing a 10x better service at a 10x lower price. So it's kind of number one. But our business model, it's a traditional business model. It's a credit card model. It's consumer finance. So it's probably the only way to make money in finance. So it is a proven model, but we just have a very kind of, I don't want to say low monetization, but we haven't focused on monetization that much. We focus more on growth. And then the question was also on
target audience for Twisto. So
sure. Similar in Czech and in Poland. It's actually a typical customer right now, 27, 28 years old. All of our customers have a bank account. They have a smartphone. So I mean, they're fully banked, digital savvy. For most of them, we're kind of the first lending product. And actually, majority of our customers are from bigger cities. So it's kind of a bit of a demographic, highly educated, above average income. And very often they actually choose us as opposed to a bank because of the simplicity of the app and some of the features that we offer.
Question for both of you. Your opinion on startups in B2C versus B2B? I guess it's in FinTech, so not general question.
Yeah, so we did start as a B2B company. So we were providing online payment solution to e-shops, and then we transitioned into B2B to B2C. And both of them are very tough. So with B2B, it's a long sales cycle. So even some e-shops I was meeting in 2013, and we're connecting them six years later. And that's a long sales cycle. But once you get integrated, then you have a big lock-in with that merchant or that partner. So it's very painful, takes a lot of time, but then it generates a lot of revenue. And B2C, one thing we underestimated is actually marketing and branding. And you need to invest a lot of money into that. So one thing is doing, Facebook ads, Google ads, but at some point you need to get into TV, and you actually need to spend a lot of money in advertising to really reach all the relevant audiences in the country. So it takes a lot of money.
Well, B2B is, it's too easy, don't do it. Do B2C. Not honestly, I mean, looking at the market in perspective, the client market is so underserved in financial industry that you have much better chance of introducing something that the client will like. B2B business, it's boring to do stuff with corporate guys, right? In banks and insurance companies. So do the client stuff.
So Michal, the winning question right now, what shoes are you wearing?
So I wear the same shoes. So I wear two types of shoes: white sneakers in the summer, and then Timberlands over the winter, like all the time. Yeah, nothing
Like for the
fancy.
past 7 years.
Past 7 years. No salary.
Yeah.
Just low salary.
Is associate question actually, isn't it normal to lose money if you are growing so fast? Couldn't Twisto turn profitable if you stop expanding?
Like seriously smart audience. Like really good. Yes. So we do grow 3x every year on the customer base. If we were to lower our kind of investment into acquisition, we could actually, so one thing is, since we grow so fast, we also need to hire more and more people. The automation of processes is not catching up as fast. But yes, if we wanted to decide we will grow 50 or 100%, we would invest much less into marketing, and we could actually become profitable much earlier. So yes, this is one of the drivers of our negative EBITDA is the speed of growth.
Jirka, looking back at your Egon adventure, would you still sell it?
No. You don't have the choice because obviously being a small Czech company and this huge multinational company comes at you and tells you that they're going to buy you out, which one of you would say no to that? But in retrospective, I made the same mistake as Michal mentioned. I spoke to corporate guys for too long, thinking that I can sort of change their way of thinking, and they just don't understand the world we're living in, meaning the startups and innovation stuff. So in retrospect, it was a hopeless thing. It was doomed from the beginning.
Another Czech question, positive one. It must be very stressful to communicate negative EBITDA to the investors over 7 years. What are you telling them? They are still interested to this business.
So the one benefit is that we are not the only ones. So actually, majority of the guys or our peers globally, they're in a very similar situation. So we're one of many. That doesn't excuse us or make it right. But ultimately, when we look at the benchmarks and peers, they're all in a very similar situation. So it's a high growth companies, ultimately burning a lot of money, adding a lot of people, building the teams. So the investors do understand. But now we are actually this year getting to a stage where it is expected that we will be kind of showing a trajectory towards positive EBITDA. So what's important, we do have positive unit economics. So when we have a customer, we actually make money on a single customer. But we don't have that many customers to really cover the cost of the operation. So it's also a question of scale. And we have ways to get to positive EBITDA. So we know what to do to get there. It's only a matter of time and money to actually achieve positive EBITDA. So it's a lot of explaining about the rationale and how we can get there, and really having a believable story that's very often benchmarked to what the investor knows. So the investors, they actually see maybe 10, 15 decks a day. So they can very well benchmark what you're telling them. Does it make sense in the context of the whole industry or your peers? And actually, so far it does.
Have you used or considered convertible loans in between the funding rounds while burning lots of cash? Or a more general question, have you considered convertible loans, question mark, for both of you?
Yeah, so we do use them. Actually, almost before every round, we do a convertible with existing investors. So it's a great way to, one thing, test the appetite of existing investors to participate in the next round, but also helps you get that additional liquidity to boost growth or kind of fix some fundamentals before raising the big round. So yes, we do.
Actually, that's what we had partly from Egon was convertible loan, and it could come very handy and quick to basically decide on this kind of funding. So yes, the same experience.
And the WeWork story and other 2019 fuck ups, mainly from SoftBank funded startups. Did they change the VC mindset, like profitability or growth? What do you both of you think?
Well, we have office in WeWork, right? So I can't be very negative about them. I don't know if I'm in position to comment, but I think they got the taste of the market right, and many things that that the company did was correct and very good and very right from the sales sort of perspective, from the business perspective. But obviously the way they did it and the way they sort of handled the investors and how they cornered them with the sort of with the only option, which was to fund more and more. I think this is ethically beyond the line. So I hope that similar stories won't sort of include such sort of negative feelings and steps. That's all I can say about it.
So none of the investors we started fundraising, we met a couple of investors, and none of them have actually mentioned WeWork. So it doesn't really impact it, especially, we do speak to FinTech or guys focusing on a specific sector most of the time. So WeWork has been a little bit remote, but I think what's ultimately WeWork is showing, so WeWork is a real estate company that's being valued as a tech company, and we do often see that in FinTech as well. So many FinTechs are actually becoming banks, but why should their valuation be 20 or 50x of their revenues when banks are valued at 1.5 of their EBITDA? So it's raising some questions, but it did not have any negative impact on fundraising or valuations of some of the assets that we've been looking at.
Okay, one question related to Lighthouse, so maybe I will respond if you don't mind. What share does Lighthouse Venture take on first investment? For us, it's a risk game, and when we analyze the global investment funds, then the ratio of failures, like how many, what percentage of the startups fail for the low-performing and best-performing startups, it's actually the same. So let's say 60% of startups fail for the best funds and for the worst performing funds. But what makes it a big difference is that the best performing startups for the most performing funds are actually big hits, which means that you need to be crazy enough or to be brave enough to invest into let's say space projects or projects that seem crazy at the very beginning, but they can be successful. So we believe that we are not only crazy ones that will invest into moonshot projects, but we believe that the experienced founders who already did it, like in Jirka's and his colleagues' case, can make it win. So first of all, we invest into startups funded by experienced investors because we know them. If you are dating like someone who's experienced, then you expect something more experienced. So we believe that the Jirka, it will be the same story. For the percentage, we don't have like standardized formula. If you want X money, we want XYZ percentage in return. So it can be anything between 10 to 25% for the investment that is between let's say 200 to 600,000. So there is not a easy answer to this difficult question, and it depends on many factors such as your experience, your potential exit, because the lower the risk, the better valuation we give you, and you need to convince us. So that is our answer. Michal, what about your Nikita engine? How is it doing?
Yeah, she's doing good. So she recently went to Poland, and she's going to go to Romania. So the biggest challenge of Nikita, that's our engine, how we score clients and allows us to provide them with financing. Biggest challenge of Nikita, or the challenge we have, is really making sure the models work internationally. So one thing is doing a risk model or a scorecard that works in a local market based on local data, but ultimately scaling that to a different market with different data. You actually need to, in each new market, you need to lose some money so you can calibrate the models. And I think Nikita is doing very well in Poland. Now the next challenge for us will be calibrating Nikita for Romania.
So you basically answered the question to plan to expand to more markets, which is done.
Yeah.
And your CPA and payback time?
Yeah, like who's in the audience?
Competition maybe.
Yeah, so this one is internal, but I will give you maybe a benchmark. We acquire customers at 1/10 of the cost that a bank acquires a customer, and the customer lifetime value over CAC is approximate, or I'll give you a range, between 12 to 17x.
When is the right time to approach investors?
So so in our case, it was before we even had a product. So it was really just a pitch deck and an idea. And you do see guys walking around the market today who are able to raise 1 or 2 million euros on a pitch deck at a pre-money valuation of 4 to 6 million euros. And that's actually happening in London and Berlin. It's not happening here in Czech. I think having at least the initial product, having some initial customers, it gives you a much better position to go and approach investors. Investors do get immune to just guys running there with ideas and say, oh, look, I have a great idea and I have a couple of slides. Unless you're a founder who's done it before or who has some pedigree or experience or already a good relationship with the investor, it's a very tough one. So go to investors when you have ideally when you have a working product, first customers, and don't go there just with slides and a pitch deck. If you're like a no-name and it sounds horrible, they will probably reject you and you will waste a lot of time.
We are actually the crazy ones who will listen to you, so don't listen to them. Jirka?
I do not have that much experience with investors because, well, our first investor was Myton, guys. It was a long way back when they still didn't have Slevomat and all those other successful things. And basically, that was one. And it was quite simple because we had like a half an hour chat and they liked the mortgage marketplace. We put some money down, I think 1 million each with Jakub, and they put the same money from Myton. So that was a small one, so it's not really worth mentioning. And the second basically experience we had was when basically Jakub was setting up Rockaway and we got funding to acquire the sales network from the first round of Rockaway. And basically that's that, because the company itself was self-sustaining. We were doing brokerage, and if you know brokerage a little, it could be profitable. It could be margin generating instantly. So I wasn't in such a tough position as Michal. So we didn't need other rounds of funding. But at this point, if I was to approach investor and I was a no-name, to use the words, I would have an advice to basically think big. Well, it's a buzzword, right? To think big, but 99 of the cases that I believe Michal is meeting, that the guys have really vision that is narrowed, meaning stuck in the Czech market or not being ambitious enough. So one thing I would do is to really think big, because that's something that would distinguish you from the rest of the crowd.
Actually, the first question we are skipping because we want to avoid the third one, like what underwear you are wearing. So maybe for the afterwards, or like after event session, feel free to ask Michal. I guess this is not relevant for majority of you. So maybe some better questions, like any tips for fundraising internationally.
Yeah. By the way, very smart second question. Who did that? Like, what's the CPA of banks? And then you can do it 1/10. You get our CPA. Smart. So tips for fundraising. So again, I think it was very much about, conferences, presenting, getting your name out. I think that's like number one, getting visibility. What we actually started doing as well, so one thing is using LinkedIn to approach the investors, but actually we started generating content. And I never posted anything on Facebook. I started posting something on LinkedIn. It makes me feel very uncomfortable, but it actually generates quite a good discussion and kind of engagement with some of the community that we target. So actually being active on channels like LinkedIn, I don't mean Facebook, Twitter maybe, no Instagram. That's where investors don't spend much time there. but really use LinkedIn. It's a great tool to kind of really build a network and really kind of, if you post something that's gonna make sense, it creates value and is a good content, you can really engage an interesting part of the investor community.
When is the right time to approach investors? I guess that someone just woke up, so we already covered that. So this one we will also skip. A question for you as well. Is it tough to manage so many different investors?
Yeah, so it got tougher last year. So before we had a board of investors and we had 5 investors in the board. Now we have 7 investors in the board. And yes, it is incredibly tough because everybody has, I mean, we all go towards the same thing. They're all motivated by the same thing, but it's very much a different personality game. So we're actually at a stage where we want to get a chairman and a moderator. So when we have board meetings every quarter, there's actually some guy who's helping me moderate the discussion and actually lead the discussion in a certain way. We ultimately want to reduce the board size, but before that happens, we actually need someone to help me manage a board. So it gets very difficult.
Have you ever used or considered using bank loans? If not, why not?
Yeah, so I did waste some time speaking to Czech banks. I would love to get a bank loan. So if there's a banker in the audience, we need a lot of money. Now, so we actually ended up getting money from German banks. The local banks, very conservative. They do see us as a competition. And they're just not willing to take, I don't want to say a risk, but a leap of faith. And ultimately, if they see the negative EBITDA, that's the only thing they see. But ultimately, we want them to finance a portfolio which is profitable. So it's kind of asset-backed financing. And for Czech banks, it's a very tough concept to swallow and finance.
For Jirka, what's the ideal outcome for you when giving presentations like this?
Like this, meaning?
Yes.
Well, to encourage new entrepreneurs, because, and one negative thing, right, about startup guys of the new generation is that we've been sitting in WeWork for a few months now, and in the lab, and so I see all those small companies popping up, and I must say that 10 years ago, you would come into in the office at 6 a.m. and half of the people would be there, and when you leave, let's say at 10 p.m., and still you'll have colleagues sitting there. When we come with Lukáš to WeWork at, let's say 8:15, it's all dark, there's nobody there, a few dogs maybe, and when we leave at 6, 7, we're the last ones to leave, right? And officially there is like 100 people in the lab, right? So I would say so. The ideal outcome of the presentation as this is that it still takes hard work. So if I'm able to communicate to you that it still takes blood, sweat, and tears, that's the ideal outcome, maybe.
From our side, the best way is to learn from the successes and failures of our speakers, and hopefully they will motivate you to come up with a better presentation when you'll be asking for money, because these guys, they learn their lessons. I'm very glad that someone else paid for their lessons, and you are very honored that they are open with you and they share their experience, both positive and negative, and that is also the purpose of Slido, that you can ask openly, and they will openly respond. I'm very thankful to them that they volunteered to came to this event to pitch. So some more. While taking this class, this is irrelevant. How to communicate better and learn more about speech. I don't understand this question. I don't know if you understand this question. But this one is interesting. How do you cope with stress? Michal.
Yes, I don't get stressed that much. And my wife is actually surprised by that. And she actually gets quite upset because I sometimes should get stressed. So first, I only get stressed by things I cannot. So I don't get stressed because I'm doing my best to avoid certain things happening. So if I'm doing my best on a daily basis and I cannot influence the ultimate outcome, then I shouldn't be actually getting stressed about it, because it's out of my, I mean, I'm not able to influence it. So there's no way or it would not help the situation for me to get stressed. So first, I do get I don't get stressed. If I do get stressed, it's really like an extreme case, like when we have 1 day of funding and we're running out of money. And then I do get a little bit stressed. But then, I mean, there's always a way to get more money and for the situation to kind of crystallize. I do have the great benefit of having amazing people behind me that are actually able to take some pressure off me. And ultimately, that's probably the best way to handle stress, is having amazing people around you. And I'm actually very fortunate to have that in Twisto today.
Jirka, one more Czech question for you. 2018 EBITDA of Chytry Honza was negative due to public data minus 86 million Czech crowns. What was the valuation and what was it based on?
Well, additional information needed. I was lucky that I resigned in December 2017.
Lucky you.
It's actually not very funny, but I did. So this is a scary example of when you have no basically leadership in a company and the company is run by corporates. So I was this actually the 2018 and 19 years were sort of harsh to look at, but I had one more comment to that. Basically, yeah, I was gonna say one thing. It happens then when you're stuck as a, let's say, minority shareholders in a company, and it's a responsibility of every shareholder basically to resolve any kind of difference quick, and we just didn't manage. It took us 1.5 years to resolve the differences between the 3 shareholders, and it basically goes on the head of each one of us that it took us so long, because the last 2 years and the numbers of last 2 years, that's our fault that we didn't sort of get the company straight quicker.
Michal, why is it so difficult to get enough money for next 2 to 3 years? And associated question, what is the ideal time to get funding for?
Sure. So why is it difficult to get enough money for the next 2-3 years? So we always fundraise for the next 18 months. Why is that? Because if we fundraise more money, we will get overly diluted. So it's ultimately about, I want to fundraise enough money so I can increase the value of the company and actually create some kind of asset value and then fundraise again. So it's a game of valuation and getting as little dilution as possible. And majority of startups do raise for the next 18 months at our stage. So nobody, I mean, obviously you can fundraise for, I can fundraise a certain amount and then hopefully become profitable, and then I'll never need funding again. But ultimately we choose to grow and actually invest into expansion. How do you, the second question was?
What is it was my question. It
Yeah.
was not there. What is the ideal time to raise money for, so that you don't have to going around in circles and being stressed?
So it never and that's our experience. It never works on if you think you're going to raise by June, it's going to happen in August. It always gets delayed. If it's paperwork, I mean, one thing is getting a term sheet. Second one is doing all the documentation. Then signing doesn't mean you get the money, but then you have closing, which can take, even 3 weeks to get the money in the account. So there's a huge process behind it. On average, it takes, or how we kind of look at it, at least 6 months from kind of starting the fundraising to getting the money in the account. So 6 months. It can also take up to 12 months, so it really depends on the investor traction. And that's why we're fundraising always fundraising. But yes, 6 months is typically how long it takes, but you always need to price in another month or 2 to get the money on the account.
Staying on the negative note, how do you handle
positive.
default?
This is
Okay, sorry. How do you handle default cases, internal collection / selling default portfolio?
Yeah, so everything internal collections, majority, we do use external agencies, but we have kept the past 7 years all the defaults on our balance sheet, so we don't sell it.
What advice would you give to your 25-year-old self? Jirka.
Well, you should see me when I was 25. I wouldn't be able to do any kind of that. So
Many years ago, right?
many years ago. But I would say don't repeat other people's mistakes, and I've made a lot of people's share of mistakes. So you can learn from a few lessons that I learned hard. And I would say work hard and have courage. That's that. And pick people and do not stress.
Yeah, I would say move to Asia when I would be 25. No, seriously, I would like. Now, with hindsight, the level of energy that you put into building a business in a small market, you can put that same amount of energy of building a business in Philippines, which is 150 million people, or in Nigeria, which is 200 million people. You might get killed, but it could be more fun. So yeah, I mean, I would actually like go outside of Czech Republic and like live abroad and start a business abroad. I cannot do it anymore. I mean, I can. I'll probably do it in the next startup, but really go outside of Czech Republic.
Jirka, you said that your startup reshaped a huge call center. So what do you think was the problem to build better technological solution?
Actually, it was your friend's company that turned into a huge call center. That was e-pojištění. Our company turned into a huge sales network.
Big difference.
Well, the disaster in financial industry is that it's overregulated. So most of the really marginal financial products cannot be sold fully digitally, just cannot, right? Because all those entrenched guys, they lobby in Brussels and obviously send the regulation to the Czech Republic. So, well, if you're doing investment products, for instance, you are overregulated, mortgages and AML processes and stuff like that. So that's one reason. And the second reason is on the part of the client, because especially in mortgages, because housing, it's very emotional, it's sort of irrational for the client. So it's the client that want to see a person face to face. So in the beginning I thought I can change the thinking of a client, but it doesn't work that way. If a client buys a house for a family and the kids, he wants to see a physical person. It doesn't make a difference if you are 25 or 55. People still want to see a real estate agent or financial advisor. So that's the reason why we acquired the sales network, because it was the people that wanted to do the mortgages in person.
One of the very smart questions. She disappeared. It was equity for your team members.
I think it makes huge sense. I mean, if you have talented people on board and you're lucky to have them, you should motivate them with stock options at least, right? Because the really smart guys, they don't do it for money only. They do it for having a piece of the company and being able to call it its own, right? So yeah, give it out to team members.
So it's a tough debate, and I think the guys you start with will ultimately not be the guys that scale the business to the next stage. So I would be very careful in first creating expectations on the equity side. I have some guys from the team here, but they're young, they're okay. No, one thing is it can create I had some cases at the beginning where I created an expectation of giving someone equity and then the person left. And it was completely my mistake on how I communicated that as a benefit or the conditions. So be incredibly careful about communicating expectations. Only give it to the top performers, and guys are going to stay with you for the next couple of years. But ultimately, the guys that start the business with you, many times will actually leave the business in 4 or 5 years of the business life cycle.
I see you have some team members. They were asking one question: how to motivate your team, then your company don't have a profit?
Yes, and they still ask for salary increases every year. Horrible.
Horrible guy.
So how do I motivate a team? So good one. So we do, I think we actually pay quite well. That's why we have such a negative EBITDA, but I think we do pay well. And when we compare it to the market, we are actually above average, number one. Number two, and I don't want to say kind of like the startup culture, great office, because we don't have a great office yet. I think it's about ultimately, how do we motivate? It's about the challenges that we provide and the ability to have a real impact on the business and what we do. And I think it's incredibly rewarding for the people. Majority of the people in the company can go to big corporates and probably make more money, but it will be pretty boring.
One question that I will volunteer to take. What is the imminent global economic downturn going to mean for VC? Well, it has multiple aspects. First, if the fund is at the very beginning, like us, we have 9 more years to go, so we don't need to fundraise for the current fund, but we need to look for startups that have clear monetization and that have clear potential exit partners in the next few years, which means to be less crazy and to do more sound stuff such as FinTech. I know that Michal is not very happy about it, and software as a service, because these startups they have a very clear valuation, they have a very clear exit partners, and economics of our fund does not depend on having a unicorn. So we can live well even with like tens of millions worth of exit per company. So it's important that we need to rethink our strategy and to focus on the startups with clear monetization and exit partners, and not dream about unicorns and then hit the ground. So that's from us. Michal, why is your board so large? Can't you cut it to 3 to 5? And which ones will it be?
Yeah, no. So it's actually great to have so much brain power and like incredibly smart people. So one of the guys, he co-founded a bank, and when he was raising money, he raised $450 million based on a couple of slides. So like amazing guys. So it's good to have these guys around. They actually all of them wanted to be on the board. So I cannot really say like, no, you'll not be on the board, because then he says, okay, but then you need to buy my shares back because I don't have an influence over the company. So so first, I like having so much brain power. Not all of them meet at the same time at the same place. So I mean, I usually get 4 or 5 guys in Prague on the board meetings. The rest dial via Zoom, which is painful. But look, I will be downsizing the board. That's going to be happening actually this year. And we still need to think about how to structure it. But yes, it's not ideal in some ways on the kind of administration and kind of handling all the approvals. But there's some benefit to it on the kind of brain power and discussion topics.
Do you use financial or legal advisors while raising money? Where do you see the advantage?
Yeah, so actually for the fundraising right now, we have actually appointed an advisor. We haven't for the previous financing rounds, but because now we're financing a bigger round, we do believe there's a benefit of having someone external that can help me manage a process. So yes, we have an advisor now. It only makes sense once you're fundraising sizable amount, and I would say from Series B plus. If you do it in an early stage, it doesn't look credible. So you're fundraising as a founder on kind of you and the team and the idea. If you have an advisor, it looks very suspicious. So only at a certain stage, it makes sense. Also, if you're from Eastern Europe like us, having an advisor who is London, so important, it needs to be someone outside of your region. So it cannot be like a Czech guy fundraising in London for you. It must be a guy in London who's meeting the local funds, and it's kind of a bridge between you and London and the investors.
What was the fastest investment we made? Actually, it was experienced founder who came up with the idea. The company was not established yet, and due diligence took a few weeks' time. And after a few weeks' time of due diligence, company was established one day. The second date, we signed the agreement, and third day we called for money from our investors. So it was quite fast, and we were impressed that it was even in Christmas time with all the Christmas parties and everything. So the lawyers worked very hard, and us as well. One of the last questions for Michal: if you were to join the other side, like the VC investor, what VC fund in Europe would you join and why?
So great question. I would probably not join any of the VC funds because I'll actually become an employee, which is something I would not like. So actually, if you were to ask me what I would like to do in the future, And if I manage to exit the business and create some liquidity for the shareholders and myself, I would actually love to do something like Michal is doing today, investing money. So I would actually love to start my own fund and raise
Which
some
you
money as
already
well.
answered the last question.
So at some point, I would love to do it, but I still look very young and I need to make money.
Any closing comment from your side, and then from Jirka, and then that will be it for tonight.
Yeah, my closing comment would be that I would not join your side. I wouldn't do the VC funding because I'm a kind of hands-on guy. So I would definitely stay and set up some small company and continue as a startup guy. And maybe a closing comment. I'm probably gonna repeat myself, right? But it's very encouraging that talks about startups and scaling and exits can still draw such a nice crowd as here. So I'm very happy to see a lot of interested guys and staying basically very late till 9 o'clock. And I admire the work of the Lighthouse team, that they are sort of pushing not only the funds and funding, but also the message about of startups and the successes. So I'm very grateful of being invited here, and it's been an honor to be with Michal on the same side as well.
That's very nice. Yeah, just have some fun. I mean, seriously, even what we do have a lot of fun, I think, even though we don't celebrate successes that often. But yeah, just have fun. I mean, do what you like doing, and that's it.
Yeah, I would like to thank to both of you guys for coming. Thank you to the audience for staying till this late. So we started later and we are finishing a bit later. But with all the questions coming, I'm very happy for your honest approach and for the energy that you took, even the typical Czech question. So thank you guys, and we are very pleased to have you here. Thank you.